Palantir off to a rocky start in the new year. The stock was the worst performer in the S&P 500 yesterday, dropping nearly 8%, its biggest decline since May. It's a major change in sentiment and momentum. Palantir, best performer in the S&P 500 last year, soaring 340% on hopes companies will keep spending massive amounts on AI software. But despite the surge, the street is still not quite sold, with more than 80% of analysts covering the stock maintaining a hold or a sell rating, making this a good battleground stock. Joining me now is Malik Ahmed Khan, equity analyst at Morningstar, who has a hold rating on the stock, and Derek Yan, senior investment strategist at Crane Shares, which owns Palantir and its AI and tech ETF. Gentlemen, good morning. Great to have you both here. Malik, I'm going to start off with you. One of the issues that you have, you're the bear in this conversation, is the valuation of Palantir at about 150 times, according to our system. Is there any other big issue with this company and its narrative other than this really elevated valuation?
To be very honest with you, first of all, good morning. To be honest with you, as we think about Palantir's business, we really like it, right? Like it is one of the only AI pure plays out there. The company's business is great. The U.S. commercial side of the business is actually doing really well and is firing on all cylinders. So our sort of like issue with Palantir as a stock has been its valuation, and that's what we've highlighted over the last few quarters, that the valuation is getting out of hand. And especially if you think about, trying to bake in the assumptions that would take you to the current sort of stock price, those are some very, very optimistic assumptions.
So, Derek, I want to come over to you. In previous years, Palantir was a bit of a black box. They did a lot of government work. It wasn't really clear what they did to a lot of people. Now they've expanded out to commercial work. So when we're talking about this valuation and just the potential TAM that they could have, with obviously a lot of U.S. and global companies looking to upgrade themselves with AI, do you believe the valuation is overstretched as well?
Well, thank you for having me. We at Crane Shares see tremendous long-term potential for Palantir. While the current valuation is very optimistic, we believe Palantir could become the go-to operating system for enterprises in the AI age. We're talking about a potential $1 trillion market opportunity here, right? So now Palantir is a key holding in our Crane Shares AI and Technology ETF, ticker AGIX. This ETF gives investors a balanced exposure of both AI infrastructure and AI deployment and applications. What's really exciting is how the AI deployment is really taking off in the enterprises world. Companies are seeing real benefits, better efficiency, happier customers, and this is creating a snowball effect for AI adoption. Palantir really stands out in this space. Their AI platform, particularly their ontology system, is a game changer. It brings together data, logic, and action in a way both humans and AI can actually work together. Plus, the AI platform has top-notch security features, which is crucial for companies to adopt AI safely. We're also bullish on Palantir's government business. The Trump administration is really prioritizing government efficiency and a digital transformation. This could be a start of a long-term trend, potentially brings billions of revenue for Palantir in the future.
All right, Malik, I want to come back over to you. I mean, valuation is about, forward-looking. You're expecting revenue growth and other things to kind of meet that valuation. Do you agree with what Derek had to say, that this company has a lot more upside than maybe we've even seen last year? Again, 340% gain, because Derek seems to be saying they have a bit of a moat. They have proprietary software that other people can't seem to quite match.
First of all, I completely agree with sort of Derek's point about them having competitive advantage. When we sort of look at our moat methodology, we do award Palantir an aeroeconomic moat. Now, as it relates to, as you said, valuations are forward-looking. I would again sort of like put that question back, is like, what do you need to believe about the top line or the margin profile for this business over a 5 to 10 year time period for you to get to a $70 or $80, as it was trading just a few days ago, dollars per share valuation. And I actually tried to conduct a reverse DCF, where you sort of like bake in what assumptions would get you to the stock price. And the numbers that I got would have put Palantir way ahead of essentially all the top software companies out there. You would have like a 10-year top line CAGR of around 30%. You would have a margin profile, gap operating margins of north of like 55%. So if that's the sort of assumptions that you have over a 10-year period, you could probably buy the stock at $80. But when we're looking at our own assumptions, again, they're very optimistic. They factor in a lot of the stuff that Derek has talked about, but we don't get there. We don't get to $70.
All right, Malik and Derek, great to see you both. Thank you very much for talking a little Palantir for us. We have to wait and see.
Meantime, take a look at shares of Palantir. They fell as well, about 8%, 7.8% yesterday. Now down about 14% for the week. On Monday night, several funds from Cathie Wood's ARK Investment Management unloaded nearly 200,000 total shares of Palantir. That comes as Morgan Stanley initiated coverage of Palantir with an underweight rating and $60 price target. On Monday, the analyst said success is more than priced in, with Palantir trading around 160 times earning, and that stock at 68.85.
I mean, it was, I think, one of the best performers last year in the S&P 500, if you look at what happened with that stock, too. So maybe not surprising to see a pullback after a much longer upward march, at least over the last
And that was really
months.
a combination of just all of the geopolitical issues in the country, plus then you add, in the world rather, I should say, and then you add
the election.
Trump on top in the election. And I think there was a view that Palantir would be a massive winner, depending on how you think the DoD budget and everything else gets recalibrated.
And there's the 1 year, up 313%.
Palantir being there's one of Cathie Wood's been an aggressive seller. ARK, she'd been a big believer. I got the Alex Karp biography yesterday. It turned out to be 37 pages. I got to get the different one. There's like 3 of them. One of them, I think, is, remember, he is a crack shooter. He went to Goethe. I know how to pronounce Goethe, and it's neoliberalism. It just gets better and better and better. He's the Bond of intellect.
All right, but
James Bond.
on clearing out, then, is Palantir still in that clearing out phase as well? To a certain
Palantir
extent?
actually has a fabulous rule of 40. They've got great growth, great revenue. Well, don't dismiss that.
I know you with the rule of 40. All right,
Bill McDermott from ServiceNow has tremendous rule of 40, David. How dare you?
What is
How dare
margin
you do
and revenue growth? Is that what,
Well, there you go. Yeah, you're like a quantum computer expert when it comes to rule of 40.
It is cold in here.
Yes,
it is.
Exactly.
I need it to be very cold, as you know.
But look, the qubits, which are basically
15 years from now, I'm really going to be going strong.
Now, the Stanford computer group, the professors really believe in it, so it's not like it's fancy.
Wait, we're back to quantum now?
Well, I'm trying to give you a full
I wanted
panoply.
more on Palantir.
Palantir is a tremendous. Look, Palantir is Peter Thiel. It's Alex
I know all
Karp,
those things, but it's also a stock that was trading at 50 years worth of revenue. So, is it?
It had a great last quarter. Look, last quarter was great. The revenue growth was great. You were in the room when he spoke.
I was.
Will you please show some deference?
I tried.
If only just because of his incredible hairstyle.
Beautiful.
I want to focus on Palantir shares now, under pressure yet again today. Down near 15% this week alone. Seema Modi has a look behind that big drop for one of the biggest winners of last year.
And Scott, even when you look at a longer-term chart, shares of Palantir down about 16% from the record high it hit on December 24th. The move has coincided with about $45 million in insider selling this year, all pre-planned. Most of that aggregate total was sold by Ryan Taylor, the company's chief revenue officer, according to Verity data and a view of SEC's filings. Meantime, Cathie Wood's ARK Fund sold about $15 million of stock. Stretched valuations, that continues to be a key focal point for Wall Street. Even with the drop in Palantir shares, it's still trading at a premium at 146 times forward earnings, making it the 7th most expensive stock in the IGV software ETF. And if you look at just ratings across the street for Palantir, there are 3 buys, 12 holds, and 8 sell ratings on Palantir. Other software names worth noting trading at a higher multiple than the software sector include SentinelOne, Confluent, and CrowdStrike, which is at about 92 times forward earnings right now. And Scott, it does seem like the street is getting more selective with Deutsche Bank today. Bullish on the sector, yes, but they suggest that a slower than expected ramp when it comes to Gen AI adoption and elevated CapEx could pressure margins. Analysts there are downgrading Adobe and Palo Alto Network to hold from buy, and they're upgrading Workday to buy. Scott.
All right, Seema, thank you. Seema Modi. So, Joe, let's start with Palantir. Because you own that, but I want to branch this conversation out to some of the other software names that have ownership up here with their PEs, which are rather lofty. But Palantir, what do you tell our viewers?
I continue to say to viewers in Palantir, sit back, wait, do not reach for the stock here. Upper 50s to low 60 if you don't own it. That's where, from a risk to reward standpoint, I take the initial shot.
Okay.
Very to Palantir, the hottest stock in all the S&P 500 last year, 340% gain. It's down a couple of percent this year. What do we do with Palantir, Michael?
Okay, if you all promise not to tell anybody, promise not to tell, I have a confession.
Just between you and I.
I bought this stock in May. Just between us. There we go. I bought it in May in my personal account because my son, my brilliant son, Robert, says, Dad, I like this stock. You should buy some. I didn't buy enough, needless to say. I tripled my money in 6 months. I've sold 80% of my position, maybe more. That's a guesstimate, but it's about that. And I've kept some chips on the table to see, okay, what I've gotten all my money out plus plenty.
Yep.
I'm going to hang on and see what happens here. But I didn't buy it across the board. It was too risky.
That is the best story I've heard from Michael Farr in the past. Your son told you to buy. You bought on the personal. You got to always listen to the kids. They'll get you in NVIDIA. They'll get you in all this stuff. Michael, thanks.
What she said.
As you hold the stock, but you sold half of it to start the year because you were getting a little uneasy with where you saw not only the valuation but the meteoric rise that the stock had.
Yeah, because I mean, we all know that stocks always, certain stocks will go much, much higher, and then certain stocks will go much, much lower than they should, and that's just like the mechanism of the market. But when I looked at the stock at the beginning of the year, I think it got up to 90 times 2025 sales estimates. And that's just so, maybe it was 90. I think it's around 75 right now. That's just nosebleed. So I just couldn't, it's a great company, but I just think the valuation just got irresponsibly high. And I think that's also why you saw insider selling, just taking advantage of really the frenzy around the name. They're going to come into earnings on February 5th. Their revenues and earnings are going to grow. I think we're looking at 27 and 40% revenue and earnings growth. But I think right now when you have a technical breakdown, it just traded below the 20-day, the 50 days in the 50s. I think you have to let it settle in because sentiment has switched on this name. And so let it settle in and find a new base before adding to a new position.
Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.